Hello, happy Thursday. Hope you're enjoying your August here so far. We have quite the week here to give you some updates on. We got jobs data and inflation that had come out and really have the markets pretty confused here over the past week. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise along the way. And again, this week, certainly a lot to cover. So let's start with last Friday. Last Friday, that would have been the 5th, I believe, 4th. Anyways, last Friday, we had non-farm payrolls come out. So last week, we talked about a little glimpse into jobs and how important this is going to be moving forward. On Friday was really the number to watch. Non-farm payrolls was a huge number. For those who follow us closely here weekly, you may know that the ADP employment report has stopped for a while. I believe it picks up actually end of September. So next month, I believe we'll have that back in to the jobs mix as well. But for now, non-farms payroll is really it. And it was a huge number. So it's great to see, but the funny thing is that we're almost in this world of good news is bad news as far as the stock market goes, because although this was great to see, the market actually pulled back quite a bit. There were concerns that with a stronger labor force or a stronger labor market, the Fed may raise rates more quickly than expected, or, looking back to last month's session where they didn't share any guidance, I think a lot of people may have taken that into to mean basically that they may not raise rates or do it very slowly. And so when we get these data points, I think the market, panicked a little bit, concerned that the Fed was going to be aggressive now in the next meeting. On top of that, this week on Wednesday, we had CPI data come out, and actually I'll come back to that. I'll touch briefly on today's data. We had initial jobless claims come out at about 262,000, and PPI was actually down 0.5%, so that was a good sign. But going back to Wednesday, just yesterday, CPI data came out, and it was still up, right? So inflation is still here, but it was up slower than last month and a little below expectations as well. So this is a good sign. We've seen very recently money supply actually start to reduce slightly, or at least, let me take that back, not grow as quickly. And a lot of times this is what can drive inflation. This is what we've been watching for inflation. And so we saw a little bit of those signs, I think a couple weeks back. And here we are seeing the CPI numbers actually reflect that slightly. Now, keep in mind, this is a monthly data point. And so although we're here with a slightly lower number than expected, this may not mean that we're not going to be dealing with inflation. But we saw the markets just take off on this. So when I said all news is or bad news is good news, that's mostly the case except CPI, because basically the markets are watching the Fed and inflation. And so really what we're seeing is if inflation is reducing, that, again, the markets are thinking that this may mean the Fed is actually not going to be as aggressive. So very, very interesting, right? This kind of relationship that we're seeing between data points and market expectations for the Fed. But again, definitely a good sign. It was up 0.3% versus 0.5% expectations. And if you look at the year over year, we're now at 8.5%. Yeah, versus 8.7% expectations. So again, we saw a big rally on this under the hopes that number one, inflation is coming down, and number two, that may mean the Fed doesn't have to go quite as aggressive in the coming session. Now, what I want to spend some time on, which is kind of tied into our question of the week here this week, is that how the Fed is looking at this thing. And what I want to really point out is to please remember that the Fed still has 2 more of these data points before their next meeting. So typically we get these data points and the Fed talks in August or so, but the Fed doesn't meet again until September. So although this was interesting to see that the labor market was strong and the inflation number, I don't want to say came down, the inflation number was growing less rapidly than expected, know that there are some more data points to come. And so, this market rally off of this certainly is expected, I think. But, there could be some data next month that just totally shakes this up. And obviously the one closer to the Fed meeting is probably going to be more important to watch, because that's going to start to tell a little bit of a story. Now, if it's 2 consecutive months where the growth of the rate of growth on prices has slowed down a little bit, that could be a great sign, right? The Fed may not need to be as aggressive. But if we get right back to where we were last month in the September print, well, you got to imagine the Fed's going to take that one pretty strongly when they make their decision coming up there in the September meeting. So really good to see that. It's a tricky time because, again, except inflation, we're in this period where really bad news is good news for the markets, because everybody is so concerned about the Fed. The Fed just kind of put themselves in the center of all things markets. And so whenever we get this good news on things like the jobs numbers, or whatever the case might be, basically the market is looking at it as a hint that the Fed may not need to be as aggressive. Or I'm sorry, that they have to be more aggressive. Sorry, let me back up. So when we get good data, like good jobs numbers showing that the economy is strong, the market's concern is that the Fed is going to be more aggressive. And so that's why we see these pullbacks in what normally would be good news. I think that this will continue for a while, again, because of where the Fed has kind of put themselves at the center of all things markets. But remember that at the end of the day, good news is good news. Look at the bigger picture here. And if we look further out, we want good news. We want good earnings. We want good jobs data. We want, inflation coming down. And so take the short term with a bit of a grain of salt. At the end of the day, the bigger picture is that the data was strong and hopefully will continue to be. Although, again, over the last few weeks, we've seen this initial jobless claims number slightly higher than expected. And so we will be paying very close attention to the August non-farm payrolls that come out in September. So, I'll kind of tie that in again to our question of the week. I think really the question of the week that we wanted to address this time was about how the markets are looking at these data points and how they relate to the Fed. So hopefully that's helpful, because we will have many more before the September Fed meeting, and obviously we'll be sharing with you what we're watching there. Coming up next week, we've got building permits and housing starts, so a little bit on the housing market. Plus, we've got retail sales, which will be really important. Again, tied to this good news, bad news type of scenario here, but really important to watch if the consumer is still strong, even with inflation. So tune in next Thursday at 3. We will see you then. And as always, if you have a question for us next Thursday, please go ahead and shoot me an email, or just drop it in the comments. And if we cover your question, we will be sure to send a copy on us for the great thought. All right, have a great upcoming weekend. Enjoy the sunshine here in August, and we'll see you next Thursday at 3.